Welcome to Building the Future. I'm your host, Kevin Horick. The radio and TV version of the show air in over 12 states. This includes both coasts and Silicon Valley. The show also airs in the UK, Caribbean, and Australia. For full show times, plus past episodes of the TV and radio show, please visit buildingthefutureshow.com. We just launched a free online community to connect past guests, listeners, and others. This community will allow you to network, chat on Slack, or get help with anything else, and a lot more. If you're interested in joining the community, buying some merch, sponsoring the show, or signing up for the newsletter, please go to buildingthefutureshow.com. I want to invite all of you in the Building the Future community to join me at Supex, the Startup Expo in Fort Lauderdale, Florida, this July 26th, where I'll be the MC. Supex is one of the largest and best startup conferences in the US and the official gathering of the Building the Future community this summer. Supex has cutting-edge content, a cool startup competition, and a half-day forum this year called #WomenForWomen, the largest gathering in the US in 2018 of angel groups, seed funds, and VC funds focused on female founders and female entrepreneurs. For more information, visit www.sup-x.org. I hope to see all my Building the Future friends there. Welcome back to the show. Today we have Andrew Jewett. He's a founder and co-CEO at Aperture Real Estate and Property Coin. Andrew, welcome to the show.
Thanks so much for having me.
Yeah, I'm excited to have you on the show. I think what you guys are doing is actually quite innovative in a space that maybe isn't necessarily known for being the most innovative. I think the real estate industry is getting a lot better. But maybe before we get into all that fun stuff, let's get to know you a little bit better and start off with where you grew up.
Sure. Yeah. First and foremost, thanks for having me on. But yeah, I grew up just outside of Boston, actually.
Okay.
Just kind of grew up a Northeast boy, and kind of stayed up there, to be honest with you, for my entire life until after college.
Okay. What did you take in
played
college?
Hockey.
Just out of curiosity.
So I was a finance major.
Okay.
I went to a small school just outside of Boston called Babson University, or Babson College.
Okay.
And I was a member of the hockey team there. So
very cool.
For your listeners based out of Edmonton, I apologize that our Bruins are so much farther along this year.
Yeah, we had a terrible season, but yes.
Yeah. But yeah, and then went to Wall Street after that, working for a company called Greenwich Capital that was subsequently bought by the Royal Bank of Scotland.
Oh, cool.
And focused on the residential real estate and mortgage space for 12 years, I think.
Okay.
And so that's actually where I met my co-founder and our CTO. So we all worked for that team focused on residential real estate and the mortgage world, through the crisis and some of the dark days of the financial distress that happened here in the United States, and especially as it related to real estate. But yeah, and then after that, my partner Matt and I both actually went over to the largest operator of fix and flip assets in the United States, where we ran capital markets for them.
Okay.
And we're part of the senior management team there. So it's funny because Aperture is now my third company with working with Matt, my co-founder.
That's cool.
And we work quite well together. We definitely have a very yin and yang relationship where we can kind of cover each other's, maybe deficiencies isn't the right word, but we definitely fill in the gaps where one person is lacking, and,
Sure. Yeah, you
and
guys
just
have different strengths, right?
Exactly. And then I can tell you about Aperture, but yeah, that's my background. Boston boy, born and raised.
Sure.
Miss it, but we're living in California right now, so it's not so bad.
Yeah, especially weather-wise.
Mm-hmm.
So,
yeah,
walk me through kind of your journey west, and how did Aperture become a thing?
Yeah, so like I said, Matt and I were moved west to run capital markets and be part of the senior management
that makes
team.
Sense. Okay.
So that's what brought us to California, and then we saw an opportunity to really leverage technology and data in the way properties are acquired, especially distressed properties are acquired. in the United States, and that's where we. That's what, you mentioned real estate being kind of, incredibly behind the times, or maybe slow to catch up. But I think we've seen this trend in real estate of people, not necessarily utilizing data and technology to its fullest.
Sure.
And that really is the thesis behind Aperture is, we spent little over a year building our systems and our technology and working with our CTO who, is a guy that we worked with, as I mentioned, at RBS, and he and us and our team really have the experience of being operators. I think a lot of companies in the real estate tech or fintech space are technologists by background.
Sure.
We kind of took the other path of, we have an awesome CTO, we had an awesome development team working on this project, but it was really built around users understanding what they needed and what they lacked in other platforms,
okay,
and building all of that into one. So our system, really runs the life cycle of identification, sourcing, identification, acquisition, management of the rehab of a distressed property, and then sale of it on the back end, all in one system. Other companies that we've seen in this space either are still using Excel and Word documents, or they've built a custom system, or they've kind of actually probably more likely taken something off the shelf, and that system doesn't talk with their accounting system and doesn't talk with their property management system or their listing system. So we said, there's so many inefficiencies in that model that we want to bring all of that in-house. And we also had some interesting ideas about how to source properties,
okay,
which is a little bit of our secret sauce. So I can't get too much into the weeds on that one. But yeah, I mean, look, the thesis is, let's utilize data and technology to make the process and make the acquisition much more efficient, just throughout the life cycle of buying distressed residential real estate across the country.
Okay, interesting. So before we kind of dive into it a little bit deeper, I'm kind of curious, did you guys all quit your jobs and do this full time? Because you said it took a year to build, or did you guys start building this while you were still working full time?
No, we quit.
Okay.
And that's one of the big selling points we have with our investors and our partners is, look, we were we were doing well. We were part of the senior management team of a company with a couple $1 billion balance sheet.
Oh, wow.
Doing this same strategy. So we left very comfortable jobs and very comfortable lives to really take this on and take a stab at this. So this is our lifeblood. This is our livelihood, and we've made that sacrifice to and not only leaving a steady paying job with good benefits and all that good stuff, but investing our own money into this development and this platform. We are the three of us, myself, Matt, and Rudy, and I forgot to mention we met Rudy at our last company, where he was also one of the senior property investors over there. So the 4 or 5 of us have a very strong core base in distressed residential real estate. And financing and acquisitions and all that good stuff, but we've invested our own money, and we are the largest investor group amongst all of our other investors. So
Sure.
This is our butts are on the line on this one.
Okay, very cool. So
yeah,
just for clarification, I think when you say distressed property, it's pretty clear, but what does that kind of mean to you? Does that just mean it needs to be like totally renovated? Does that mean like it needs to be knocked down and rebuilt, or what does that really mean to you guys?
It depends.
Okay.
It typically means that there's something in the condition of the property that is causing it to not be attractive to an end user, right? So maybe it's been abandoned, it was foreclosed and just abandoned for the last 3 years because the bank didn't know what to do with it, or the person can't afford the maintenance and therefore selling it to an end user would it would drastically reduce the buyer base just because it's either not eligible for financing or somebody doesn't want to take on the headache of performing those rehabs.
Okay.
Typically, we won't do ground up, knock a structure down and build it back up. That's just a little more cost and time intensive than we like to take on. But we typically look for the house that's, frankly, we love houses that have been boarded up and abandoned. I think there's, not only from a return perspective, it's attractive, but it's also attractive because, our core business is community revitalization. Sure. That's what we do. And so we love the story of, going in and buying the house that's been boarded up and vacant and, maybe had some, vandalism or drug use issues or something like that, and coming in and cleaning it up and giving it back to the neighborhood. I can't tell you how many times we've gotten letters or just like a knock on the door when our contractor's working along and the neighbors coming up and saying like, thank you so much for doing this.
That's awesome.
It's
rewarding,
when we first start. It is, and we're actually in the middle of an initiative right now trying to partner with some local nonprofits in the markets in which we operate, where we can, either veterans related things or housing related nonprofits, where we can offer that house to somebody in their community and somebody in their network, so that cool. We're providing affordable housing to people who need it, or we're providing affordable housing to veterans, and giving them an early exclusive look at the property. So we're in the middle of that process right now. It still hasn't been rolled out, but when we started this thing, we had the ability to take a step back and say, look, yes, this is a for-profit business, but it's one that is socially responsible, and we want to operate a company that is socially responsible. So how do we do this, and how do we give back to the communities in which we operate? So, it's very it's rewarding from a return perspective, but even more so from a kind of a social good perspective.
No, that's very cool. So you kind of have, well, at least I understand it, like I can sell you my house, or I can kind of get a loan from you guys. Is that on top of that?
Yeah, that's the public side of the business. So people, if they need to move quickly, or they want to sell their house without the hassle of going through the 2 months of maybe fixing some stuff before it's listed, and then you have to leave your house every weekend to have it listed and shown. We will offer people the ability to give us all your information. We'll send somebody out to have a look at it, and we'll give you a price. It's gonna be a discount to market for that convenience, but again, it's a convenience product.
Sure.
That's a very small piece of our business. The other side is the lending piece of it. We lend to smaller fix and flip investors across the United States.
Okay.
That's a much smaller piece of our business, and one that we like, but it's just that's a much higher much more competitive environment.
Sure.
Where we think we have the strategic advantage is in the utilizing data and technology to acquire homes across the United States, and that's our core business. But if you go to our website, that almost says nothing about that, because that's kind of like our proprietary trading system.
Gotcha.
that we run the business off of, and it all of those other aspects of it feed off of that system.
I got you. Well, and realistically, like somebody like myself doesn't have access, or if I'm not, like, I don't need to have access or know about that side, right?
Right, exactly.
So I without kind of getting, maybe, like, I don't want you to have to like give away anything, but what types of markets are you guys in across America, or is it easier to say where you're not in currently?
I can answer both of them. We are not operating in California. We are not operating in Florida. We are headquartered. Well, sorry, we're not with any scale. We buy a couple deals every once in a while in California if we think it's a home run trade.
Gotcha.
We think California, from a macro perspective, is overheated right now.
Sure.
we live in California. Half of our team lives in California, so it's it would seem logical that we are, but the beauty of what we did and the fact that we were able to start this thing from scratch and had the benefit and the kind of good fortune of being able to kind of sit there and invest our own money is that we had the ability to look at markets across the country and say, where do we want to be?
Okay.
We part of the system that we built analyzes real-time data from every single market across the country.
Okay.
So we're watching what's going on in every market from a macro perspective and then from a micro perspective in each given market. So we tend to look for strong growth in population. We tend to look at what's going on in relation to the housing crisis. Where were you in the housing crisis? Where are you in relation to that now? And then a whole bunch of other factors that are built into our algorithms that say, this market looks much better than this market. So we're currently operating in 11 markets across the country. We're looking to expand into another 3 or 4 before the end of the year. But it's all, it's a very long process, right? If we go into a new market, we have to send somebody there. We have to vet the local contractors. We have to meet with all of these people. So it is a quick process, I think, from relatively in the industry, but it's not nearly as quick as like Uber going into a new market. It takes a little bit more diligence than that.
Right, and you're literally you physically don't jump on a plane and go to that market. You have somebody there kind of full time or part time, or how does that kind of work?
Well, initially when we're diligencing it, yes, we go to that market.
Okay.
But the way we operate is we have a team in-house that's career general contractors and guys who have in their careers, we estimate our team has flipped over 3,000 houses.
Wow.
Not as Aperture, but
Sure.
but in their various roles before. Their job is to manage the process. So we manage it internally, but we leverage on the ground contractors, brokers,
Gotcha.
and professionals to help us manage that process. And it's all managed in our system. So
Gotcha.
they're responsible for reporting on a daily basis what's going on the process, and so that way we can manage it. Literally we could manage it from anywhere. It's all cloud based. It's all you log in and there's your projects.
Got you. No, okay. No, that's cool. So I want to kind of change gears a little bit. You guys have this property coin, and it's propertycoin.re is the domain. What exactly is it, and why did you guys decide to found it?
Well, so it is a digital currency.
Okay.
I think it's maybe currency is the wrong word. There's been it started off as a digital currency. It's now shifted towards a digital investment vehicle.
Okay.
So that it's kind of like cryptocurrencies are taking this. There's becoming this fork of utility versus security tokens, and so we've definitely gone down the security token avenue. It's definitely an investment, but
makes sense.
But to go back, we did this because we saw an opportunity to take our experience as former investment bankers, specifically focused on the residential real estate world, and asset-backed securities. Take that experience, apply it to the what was at that time, and I think still is, a bit of the Wild West in terms of cryptocurrency issuances.
Sure.
We looked at it and we said, look, there's a lack of proper asset-backed offerings that the market needs, and we saw that this is going to come. Like, there will be a time in the future where major corporations are issuing asset-backed and security tokens, and we saw that, and I think we jumped on it early. But we also had a company that needed growth capital. Our business is buying homes. We're not buying T-shirts. It's extraordinarily capital intensive. So we said, look, we're supposed to take a shot at this and issue a currency or a token that represents a fractionalized ownership of the pool of assets that we go and buy with that money. So we're looking to raise $50 million with this raise, and if somebody buys a couple tokens, their couple tokens represent a fractionalized ownership of that $50 million of initial portfolio.
Interesting.
And the cool part about it is, the crypto world really doesn't have anything that is naturally appreciating in price. It's all, in my opinion, largely speculative. People invest in it and try and convince other people that this thing is the best thing since sliced bread. But for ours, we are reinvesting 100% of the profits that come from that $50 million or initial $50 million back into new properties and loans.
I see.
So unless we don't perform, which we think we will, but there's always a risk in investing.
Sure.
That value should increase over time, and your per token share of those assets will also, correspondingly increase. So we think it's a really innovative project, and why did we do it? It's another source of capital for us, but it's also we felt as though we were innovators in the real estate tech and fintech space, and so this is kind of like the next level of innovation into the blockchain and crypto world, and so why not? If we can be innovators in a couple different spaces and really have some value to being one of the pioneers in this, we should absolutely take that chance.
No, I think that's great. So I just want to kind of step back for a second. For people that don't understand kind of what maybe blockchain or crypto kind of is, do you maybe want to kind of just give a bit of a background on kind of how it kind of works and what exactly it is?
Absolutely. So the first thing to know is blockchain is the underpinning of all cryptocurrencies. So if you think about it, it's kind of like the relationship of the internet to email. Okay. Email is built on top of the internet protocols that basically allow people and computers to talk to each other. So email is just one way with which you can send information across that internet. The same thing holds true in the very most basic concept of the blockchain and cryptocurrencies. But blockchain is a distributed ledger. So basically, it means instead of having server rooms, Amazon has their AWS server rooms. Yep. This is leveraging a very complex math equations that allow each person's computer across the world to act like a storage network for that ledger. So if I wanted to send you $5, there's an unbelievable amount of computing power out there that's all rushing to calculate and solve a math equation that basically proves that I've sent you that $5 or vice versa.
Gotcha.
So that is, each one of those transactions is called a block. Okay. And so every time a new transaction is performed on the network and validated on that network, the previous block becomes the building block for the next block and the next block, and it becomes exponentially harder to break into that initial block because you'd have to go all the way through those corresponding transactions to like falsify that initial record, and so without going super geeky on you, I'm starting to get into the weeds a little bit, but it basically provides an immutable distributed ledger of transactions. And so Bitcoin is the most famous one, is basically a transfer of value that, because it's out there and millions of people can see that a transaction occurred, there's real value to that. I sent you $5. Anybody in the world can go on and say, "Oh, hey, Andrew sent $5. Gotcha. Cool. That there's that record." So therein is the value. That is, there's so many interesting things that are going on in blockchain, and I think there's so many different use cases of building networks, building ways for people to transfer money in poverty-stricken countries that doesn't involve a bank, that doesn't involve a central government that may be corrupt. There's so many cool things. We're taking it in a different direction. We're taking it in, hey, before now, nobody has been able to invest into the U.S. fix and flip space unless you are an extremely high net worth individual and you happen to know somebody who's doing it on any scale.
Interesting.
We were at the largest operator in this space, and they had a fund that was primarily made up of some very high net worth individuals.
Okay.
So we're saying, let's open up this market to anybody in the world who wants to invest in this, and we can do that because we can issue this token where there's no transaction, there's limited transaction fees. The ability to transfer that ownership is quite simple. You just if you have a wallet address, and you go onto a cryptocurrency exchange, you can trade that ownership of our portfolio with somebody who's in Thailand or Indonesia or whomever has access to that network can trade this asset. So we liken it to if you went to pick any number of the largest hedge funds in the world and wanted to invest in their real estate fund, you would have to put up a lot of money to do it.
Sure.
And B, it's really illiquid. You're going to probably pay a 20% fee if you want to sell that on the back end before they liquidate it. So here, if you want to get out, no problem. There's hopefully somebody on the other side of the world, or maybe down the street, that wants to buy it.
Sure.
So that was a very long-winded explanation of what it is, but I hope that was informative.
No, I think it's good, right? I don't think you got really too technical. But just to be clear, like traditional Bitcoin, I can't actually mine your currency. Correct?
Correct.
Okay.
Correct.
Okay. I just want to make that clear because sometimes that gets a little, and that's an interesting kind of topic. But so I basically, do I need a minimum amount to actually get kind of buy-in, I guess is the question.
So yes, for non-U.S. investors,
Okay.
So that's anybody who is not a U.S. citizen or not living in the United States.
Okay.
You can the minimum is $100.
Okay.
So we're selling the token for $3 a piece. Minimum is $100.
Okay.
We just need to collect some information on you to make sure that we abide by all of the anti-money laundering, know your
Sure.
customer, anti-terrorism, protocols.
Yep.
But if you are in the United States, unfortunately, the current regulatory regime is such that we must limit it to accredited investors. So that means you've had $200,000 of income for the last 2 years and a reasonable assurance that you will continue that,
Okay.
or $1 million worth of assets that does not include your primary residence. So
Okay.
in the U.S., it's much more restrictive than non-U.S., and that's regrettable that we have to go down that path. But it's the kind of the catch-22 of living in this world right now, where it's still somewhat uncertain. I think the SEC is doing a good job of staying on top of this and being receptive to potentially changes to that, but it's still a long ways off.
Interesting. Yeah, I could see that being kind of a huge issue, right? But because there's only a fraction of the population that meets those, right?
Yeah, and it's so counter. It's so counter to the general thesis of this whole thing, is that Bitcoin was created to allow for a transfer of wealth amongst people who didn't want to be part of the traditional system, and there's a whole host of other currencies that do just that. And unfortunately, by limiting it to accredited investors, we're leaving out all of the people that could benefit from this. And until such time as the regulatory oversight and regime of it changes, we're beholden to that.
Sure.
You know, it wouldn't be our choice if we had our druthers.
No, that makes sense. That's interesting. Okay, so I'm curious though, to like, how did you guys kind of come up with the idea? Because I get that, like, it maybe changed a little from kind of maybe your original kind of idea, but and now that you guys are kind of up and live and people can go buy these things, I'm kind of fascinated to know, like, how you came up with this.
It's a fun story.
Okay.
So Matt grew up in Michigan.
Okay.
One of his two best friends growing up runs a IT and basically tech support company for area hospitals in the Denver area and the mountain area in Colorado. So
Okay.
he's a technologist guy, loves all this stuff, and one of his former coworkers had moved. His wife is a cancer researcher, and so she had moved to Switzerland, Zurich.
Okay.
And he was just a technologist by nature, loved getting into this stuff, and had been an early adopter of Bitcoin. And so he kind of just so happened to find himself in the center of the crypto valley. So Zug, Switzerland is what's called the crypto valley.
Okay. Yeah.
Any of the big name crypto people or funds or just developers that everybody's heard of is in Zug, Switzerland.
Sure.
And so he kind of happened to find himself in that area and became quite friendly with a lot of interesting people. And we were just touching base with him, just because we were doing some cool stuff in real estate tech. He was doing some cool stuff in cryptocurrency, and Matt's mutual friend put us in touch, and it just kind of like the idea sparked of like,
Cool.
He said this is really interesting, and this is game changing in terms of just the transfer of value and wealth, and we said, well, my God, this is game changing in terms of the ability to transfer securities and tokenize assets. And so we just started kind of brainstorming and realized that we could do this, and we could have a real impact on the world in the way this whole industry develops. And so we started that last summer. So June, July of 2017, we started those conversations, and it's been 9+ months of kind of working on it and developing it to get it to where it is today.
Sure. No, that's really cool. Do you, by chance, happen to know Ian Simpson? He runs the blockchain competition over there.
I don't, but
Okay.
I've heard his name thrown around.
Okay.
And we're actually applying to be part of there is a blockchain competition for real estate and finance specifically, and I don't know if that's the one that he's running, but we are applying to be a part of that as kind of the competition for whatever best blockchain real estate project of the year.
Sure. No, okay, that's cool. No, okay, so that's actually quite fascinating. So I'm curious though to kind of, it's on sale right now. You're doing this initial offering, and part of the reason I'm asking is because I'm kind of selfishly curious. What happens after July 31st?
So July 31st, hopefully we will have sold everything. We'll sold all 50 million.
Okay.
We will. Because this is a security token, there is a 1-year period where people have to hold the tokens.
Okay.
So we're right now we've announced that we're going to be partnering with a firm called T0. I'm not sure if you're familiar with them.
No,
or
I've never
your
heard of them, to be honest with you.
So they are kind of like the leader in building security token exchanges. So listings that are exclusive for security tokens because they have all sorts of restrictions and limitations on them. It's much different than just going to Coinbase or any of the major exchanges. So we've announced that we're going to partner with them. They are still kind of working on their platform and their system. They hope to be live in September, October of this year.
Okay.
But we'll after that year's time, our token will be free for trading on, hopefully, not just their platform, but other security token platforms that we're working with. Haven't yet formalized anything with any of those other ones, but we are working on that.
Okay.
And then it's open for trading. So we're going to, because there's that 1-year hold period, we're going to kind of run the business. We're going to buy those properties, we're going to invest them, and then we're going to reinvest the profits into that. So the hope being that by that 1-year time frame, and again, this is all subject to our ability to make profitable trades, and
Sure.
my lawyers would yell at me if I didn't say this is do your own diligence and consult your advisors and all that good stuff. But we hope to have, by that year's time, turned that $50 million twice, or if not twice, maybe close to twice, because our average hold time is 4 to 6 months. So
Okay.
we would hope that the value of that token would be, or the pool would be more than that $50 million, and therefore there's just an initial increase in the price. But it will be fully tradable on those security token exchanges and available for transfer across the globe.
Okay. And I guess, I don't mean to sound negative, but what happens if you don't raise the full amount?
We'll just use whatever we raise, and we will operate. We have no shortage of opportunity. Our system identifies and analyzes over 3,500 properties a day in our 11 markets across the country. So we obviously, all of those 3,500 are not in distress,
Right.
nor do they look like great deals. But even we kind of typically whittle that down and are submitting bids every day. So there's no shortage of properties to buy. So if we raise 15 million or if we raise 5 million, we're going to take that money and we're going to do exactly what we say we're going to do. And hopefully in a year's time, we'll have proven ourselves, right? We'll have that track record of profits and the growing the value of the coin. And hopefully if the market's kind to us, we'll come back and say, here's property coin 2, and hey, look, we did it already. We told you we were going to do it. We did it. Who wants in on the next round? So it's kind of like, look, it would be disappointing, but not discouraging.
Sure. Yeah, I guess. Yeah. Okay. No, that's interesting. So I guess for people that maybe, what's the difference between kind of this, this kind of coin, different offering compared to just a traditional kind of investing? It's really the form in which your ownership is represented, right?
Okay. So in traditional investing, you're either investing in a stock or a bond, and that's evidenced by a stock certificate or a bond certificate. This is your ownership is represented by a token and on a smart contract that says this wallet ID owns 3 tokens, and that's worth this price because that's what the market tells you it is. So instead of going to TD Ameritrade or Merrill Lynch and seeing your statement that way, you're going to your wallet and seeing your statement that way.
Okay.
It really all it is disintermediating maybe is a bad word, but it's just a different form of ownership than it is than really anything, because we took, from a structural perspective and a documentation perspective, we took all of the best practices of our kind of former lives of this entity has its own bank account, it has its own entity with which it purchases properties. That's really, really important for governance issues. There's no commingling of funds. Sure. On our side. So from the governance perspective, it looks no different. From the ownership perspective, that's where the change is versus kind of the traditional world.
Okay. No, I thought it was kind of interesting to mention that, because I think the whole space is so new that people just don't know, and so sometimes they don't maybe do some of these new ways to actually invest their money. So I thought it was worth mentioning. The other thing that I'm curious about, though, is where do you kind of see maybe the crypto kind of blockchain space kind of going? Like, because you're in it, right? You guys are doing this. Like, do you have any kind of, things that you've been thinking about that where this could all kind of go?
Yeah. I mean, look, we were talking to some. So we're in LA.
Yeah.
There was a huge crypto conference in LA Tuesday, Wednesday of this week, and we were talking to somebody yesterday who. Look, I think there's two distinct camps, right? There's people who love the traditional utility space of it, so actually either buying products and services or using the network for some reason, and that token represents the ability to utilize that network. But we were talking to somebody and asked her yesterday, and she's a prominent investor in the space, and said, what kind of really interests you? Just from a fun, just from a utilization or just an interesting project. And she said the application of virtual reality and blockchain together is really something quite cool. She was talking about a company that it's called Wave, and it's basically they provide virtual raves. I'm not a raver, but it's fascinating. Like, you put on your VR headset and you are transported into a club, a rave club, and you can, do some somewhat maybe nefarious things in that are associated with raves, and you can talk to your friends and interact and transfer, using your tokens. You can transfer, shares in certain things that are involved in that rave, like changing music or doing other things, but on a social perspective, right? So that the social aspect of it is really cool, and it's all captured on the blockchain. So the implementation of blockchain as a ledger for those transactions and those interactions is pretty cool. I think another very cool use case is identity and credit scoring. The traditional methods of gathering data on people for credit is very centralized, and oftentimes can be really hard to prove if there's identity theft that's occurred. So creating an immutable store of your personal data that's only available to the people that you want it to be available to is a really interesting thing. And then the ability of other service providers, credit providers to access data about you that may be more insightful as to your ability to repay debt, that's pretty cool. But I think from our perspective, I see a huge wave coming in the tokenization of assets. I think we're very early on in this, but you're starting to see the Goldman Sachs of the world, the Barclays of the world, dipping their toe into what's going on with cryptocurrencies and what's going on with blockchain and how do we tokenize assets. I mean, we went to in February the largest securities conference for asset-backed and structured finance, and we were just kind of spreading the word of what we were doing, and a lot of people were very interested. Ernst & Young mentioned us on a panel as like kind of the up-and-coming asset-backed and tokenizing assets project to take a look at.
Sure.
But that level of company is really looking quite hard at this, and I think you'll start to see in the next 3 to 5 years real assets, anything from art to real estate to wine to just diamonds, anything that needs to be traced and tracked and can be done easily and quickly and efficiently and reduce costs of doing so. You'll start to see asset-backed tokens coming in some serious size in the next few years.
Interesting. Yeah, I totally agree with you. I think it's actually quite fascinating where I think we're at kind of the very, very beginning of all this stuff, and the fact that just the security component around this whole thing, and probably a security expert would probably argue with me maybe a bit around it, but like for the most part, like I think it's way more secure than a lot of the stuff that we currently have now. And so it just kind of seems to make sense to move into these industries where people want instant verification for whatever they're trying to buy, right? Or be able to provide instant verification for themselves.
Right. Exactly. I think the one. So especially in real estate, I mean, it is the single largest asset class in the world,
Sure.
and it's so ubiquitous, right? Everybody needs housing. Everybody needs an office space. Everybody needs a storage space. It's so fundamental to our lives that it's the inevitability of it coming onto the blockchain is staggering. I think you'll see groups like us doing the how to tokenize assets, either large scale in a single building, like tokenizing the Empire State Building or the World Trade Center, or something like that, or the fund structure like we're going for. But I think the biggest nut to crack, and the one that's going to be probably the hardest and longest to come to fruition, is how do I tokenize my individual house? How do I sell the record of my transaction? I want to sell my house to somebody else and put that on the blockchain. That's a huge project, and one that is a complete game changer when somebody figures that out. And there's been projects that have tried to do it. Cook County, Illinois tried to do it. It worked, but the problem in the U.S. is it's not only state specific, it's county specific.
Wow.
You have to have adoption of each individual county, and there has to be some agreement. And again, it's a challenge because it kind of goes against the whole Constitution of the United States a bit. The whole idea that states and local rights are tantamount is kind of contradictory to this whole, everybody's on one ecosystem. So maybe Cook County wants to do it on an Ethereum blockchain and somebody else wants to do it on a different blockchain. How do you make those systems talk to each other? That is a unbelievably massive challenge, and certainly above my pay grade to try and figure that out. But what we want to be, if somebody's looking to do that and they hear this, we want to be supportive and we want to help out. So we're open to doing that. But that is the game changer right there in the real estate world. I think you'll see folks like us and folks trying to do large scale commercial be much more successful before that happens.
Yeah, interesting. And just getting the right connections to even move into that space and start having the conversation. And there's probably just a ton of education that needs to happen, right? Like I think majority of people at this point have heard of Bitcoin. I think a lot of people have no idea what it really is, how they get it, etc. So I think a lot of times it's just you're going to spend a ton of time educating, and then there's going to be tons of meetings about it, and then you're right, like all deciding what they're going to do and what they're going to pick. That's a big hurdle.
Yep.
Interesting. So we're kind of coming to the end of the show, but I want to make sure, is there anything else that maybe we didn't cover today that you've kind of wanted to mention?
No, yeah, well, sure. One of the biggest questions that we get is, real estate has always been technologically, maybe I'll say in the Stone Age,
sure.
But also that it's hyper local, right? And people say, well, how the heck can you manage properties from California that are in Nashville or in Memphis?
Sure.
And the answer is technology allows us to do that. We do leverage boots on the ground people that we've worked with and we've vetted. But this is a model that there's very few competitors in this space, and our intent is to make this. Our last company was the largest operator in the space doing this on a national basis. There's one other person who's doing it really on a national basis, and we want to be the third. So $50 million to us seems like actually kind of a small amount, but we want to be reasonable and thoughtful in our growth. We don't want to grow this thing just astronomically and all of a sudden be producing unprofitable trades or not as profitable as we know we can be.
Sure. So
a lot of people ask us is this a scalable business? And the answer to that is absolutely, and we know how to do it. We've done it at scale before. So
sure.
That's kind of like my parting statement on Aperture as a scalable business, because we get that question a lot.
Interesting. Well, but I think the fact that you're using data makes it really helps that, right? Like, if in some ways I think it's better and makes it way easier. Like, I think that's the thing that people don't understand is you don't even need to be in the same country at this point if you have the data. Is
right.
that kind of a fair statement to say?
I think certainly from a process management standpoint, it's absolutely true. You do need to get people you trust on the ground, and you have to be diligent about vetting local operators. But to the extent that you have that, and we think we have built a system that allows us to do that. You're right. You don't need to be in the same zip code, the same state, the same country. As long as you know how to do it and run that process efficiently and have the tools with which you can do it, which we do. It's. I don't want to go so far as saying it's easy, because it's not.
No,
but
it's incredibly difficult.
But it works.
Yeah. No, I 100% agree. Well, Andrew, I really appreciate you taking the time out of your day to be on the show. And maybe let's close with mentioning where people can get more information about Aperture and PropertyCoin.
Yeah, so aperture.re and propertycoin.re are the websites. We are on social media, Twitter, Instagram, Telegram, LinkedIn. I think it's all of them are aperture_re or property_re. But if you find one, there's links to all of them. Actually, there are links to them all on our webpage. So either of those web pages work.
Sure. Well, Andrew, I really appreciate you taking the time out of your day to be on the show, and I look forward to keeping in touch with you, and have a good rest of your day, man.
Likewise. Thanks so much.
Thanks very much. Okay. Bye.
Thanks for listening. To join the free community, buy some merch, sponsor the show, or sign up for the newsletter, please visit the website at buildingthefutureshow.com. The music for the show is done by Electric Mantra. You can check them out at electricmantra.com and keep building the future.